Trailblazer. I work with investor quarters in REI Live, Sarasota. I'm so grateful to have Paul Farrington with us. He's works with LendingOne, which is a happy compromise between an investor hard money loan and your conventional loans that are a little bit more of a headache to jump through. So they were created by investors to kind of fill that gap in the market, which I am not going to do it justice. So I will let Paul tell you all about LendingOne and how they came into existence.
Okay, great. Thanks, Catherine. Much appreciated. And actually, I'm glad you started with that because it's definitely good to understand the big picture. And sometimes I have so much to tell people, I sometimes leave things out. So yeah, LendingOne, based in Boca Raton, Florida. We recently got ranked the end of last year as the fastest growing private lender in the country. So we really kind of sit between conventional financing and hard money. So traditionally, conventional financing, you have the lowest rates, 3, 4, 5%, and but it's hard to qualify. They want all your income docs and et cetera. And hard money, it's typically easy loans to get, but 10, 11, 12, 13, 14% rates and 2, 3, 4, 5 points. So we're kind of in the middle. The founders of our company are both longtime real estate investors that got frustrated with what's out there in terms of lending and lack of service, and so that's why we were created. Do you want me, Catherine, to just keep rambling on and go through the programs, or how do you want to format?
Yeah, that works. Because I know that you guys have changed some of your loans that you're doing now with everything that's happening, but on an exciting front, there are still loans going out because I know a lot of investors have had trouble finding money to continue to make deals happen, which is how we all make money. So if you want to run through, because you have both options for fix and flips as well as for rental loans now as well. So I know that there's a lot of investors on here that are excited to hear about that.
Great. Yeah, happy to. And what I will do is just kind of give a kind of a general overview of kind of where things are at now, and then obviously we can push my contact information and all that out, and people can contact me for more specifics. But yeah, I'm happy to say, kind of going back a couple of months, most all the lenders in our space basically paused or shut down because the financial markets were upside down and so forth. So we stopped lending for about a month and then started back up with fix and flip only. And now we also are offering long-term rental loans, 30-year fixed, et cetera. So I'm really happy to say that. I would venture to guess 7 or 8 of the top 10 lenders that are out there are not currently lending at all. And if they are, a lot of times it's very, very stringent guidelines. I'm going to give you, as I always do, Catherine, the good, the bad, and the ugly in terms of, kind of where things are at. On the one hand, it is great that we're lending. We have 2, solid programs. That's the great news. We're closing loans every day and pretty quickly and efficiently. The quote unquote bad news is, the rates and the terms aren't quite as low as they were, but still, we've actually, I'm happy to say, on the positive front, we've actually, in the last week and a half, we've lowered our rates twice. And we've lowered some of our fees from where they were, a month ago. So we see things as getting better over the coming weeks and months. And we're here to help. I guess I'll start with a brief kind of overview of our fix and flip loans. And if I stutter a little bit, it's because we have been updating and changing the guidelines somewhat frequently over the last few weeks. So I'm going to pull up some notes here to make sure I get it right. I don't know if people have the ability to chime in and ask questions. If you do have a question you want to, you're welcome to, we can potentially hold it for later. But the most important thing is we get you the information that you need and the contact information to get a loan started with us.
Yeah, and I don't mean to interrupt. We actually have a chat box that I just posted in. So if you guys have questions, if you'll post in the chat box, that way there's no echoing or talking over each other. That seems to be the best way to do that.
Perfect. Making sure it's working here. Good deal. So I'll start with our fix and flip program, and currently we're lending up to 80% of total cost. And the good news is the max that we ever did was 85 or 90% of total cost. So things aren't as far from normal, quote unquote, as you might think. So, I'm definitely happy to say that. I will say for our fix and flip loans, for the time being, we do require experience. And typically that means having done at least 3 flips in the last 2 years. We do also, just a side note to that, we do also count rental loans as experience. You need a little bit more than 3, but if you've done a couple of flips and you own a couple of rentals or vice versa, then there's a good chance that we can lend to you on our fix and flip program. But for the time being, we do require experience. Previous to to this whole pandemic thing, we were not requiring experience on our fix and flip. So that's one of the changes. But like I said, we're going to 80%. Interest rates are generally 9.75 to 10.99, which I'm happy to say because a couple of weeks ago, we were up to like 12.5%. So we've already lowered the rates to a more reasonable level. And some of the other kind of key factors, I guess I'll talk a little bit about structure of what that 80% means. Typically, that means an investor might put down, say, 25% or in that range on a down payment on a property on a purchase, and then we would lend the balance of the purchase plus 100% of the rehab costs. So again, fairly similar to what we were doing previously, just slightly lower leverage. And I'm not sharing my screen at the moment, Ivan, I appreciate that. I might share some information in just a little bit, but to be honest with you, we've made so many changes to our marketing materials that we haven't updated everything to the current ones because we know they're going to change and hopefully for the better in the next few days or week or so. But if you put down, say, 25%, we will lend the balance plus 100% of the rehab. Typically, what we're looking for is, aside from the experience, we are currently, for the most part, only considering what we would call light to medium rehab loans. So we're currently not offering heavy rehab. Heavy rehab is where you're adding, more than just, 50 feet of square footage, where you're, basically doing an addition, whether it's, basically just changing the footprint or adding significant square footage. So we're currently not lending for those types of rehab projects, but I imagine that we'll have something in the next, in a matter of weeks, where we'll be doing more of the heavy rehab. But for now, it's kind of light and medium rehab. And let's see.
Are you judging that based on a dollar amount, the heavy to light, medium, or is it a square footage addition, or is it, how are you
Good
judging
question. That? Okay, good question. I'm glad you brought that up. So we're looking at both. And so generally speaking, if you're adding square footage, then that's automatically going to be a heavy rehab loan. On the other hand, generally if you're at over 100% of the total cost is in rehab, then that's generally considered heavy rehab. In other words, if you buy a property for $75,000 and you're going to put more than $75,000 in for rehab, then that's going to kind of default to the heavy rehab. One thing that I will say that's kind of been nice with LendingOne since it's LendingOne's inception is that we're going to kind of try and look at things, and be somewhat flexible. So, if you have a super experienced investor that's, maybe adding one bathroom and, it's minimal, or there's a little bit of flexibility, in other words, and we purposely kind of write a lot of our guidelines so that they're not hard and fast, so in general, everything I'm going to speak about today is, again, kind of a generality. If you have a scenario that is close and you're not sure, call me, text me, email me, and let's dive in, and we'll be completely straightforward and transparent with you and give you a quick answer on exactly what we can do and can't do. Leanne had a question about does that apply to condos or only single family homes? Glad you brought that up. We are currently not lending on condos. So that'll answer that question. We are lending on single families, townhomes, 2 to 4 units, etc. As far as property types, really for us, the only thing that's changed, and that's just for the immediate future, is no lending on condos, unfortunately. What else do we want to talk about on fix and flip before we get into the long-term rental loans? I'll go.
Process is.
Come again, please.
Remind me what your process is. Days to close,
Yep.
inspections, like that.
Okay, so process is pretty straightforward. We generally can close a fix and flip loan. Our standard time period is 7 to 10 business days. So we are up and running and closing in that time period. Now, there's always going to be the asterisk for the time being of, appraisers being able to get into houses, because we lend nationwide, and obviously there's different things going on in different parts of the country. But keep in mind that it's only about 7 to 10 business days. Also keep in mind the very first step is to go online. We're big on very, very simple technology. And Catherine, I'm sure, has a link to send. And you can go. Yep, she just shared it. That's great. And go online, complete an application. The nice thing about us is you can close 20 loans with us, and you only have to fill out one application. So we only need your personal information one time, and then after that first time, it's all just property-specific information. So go online, submit the application. As soon as you do that, I automatically will get a message, and so I'll be able to communicate with you, and you'll be able to see online kind of exactly what you qualify for. I will give that kind of asterisk as well, is if you go online and something doesn't look accurate, or you're wondering about something, we are big on technology. However, with everything changing quickly, we're trying to keep our software up to date to make sure it's giving you accurate quotes and stuff. So, but if you have a contract, you're ready to close, we'll address it right away and make sure you're taken care of. I see Julie's question. Were you going to ask something, Catherine, or mention something?
Nope. I was going to reiterate where the 3 flips in 3 years came from.
So Julie, in terms of our experience for fix and flip, we're generally looking for properties sold in the last 2 years. So 3 properties in the last 2 years. Now, if you've got 3 or 4 in the last 3 years, get in touch with me. There's a good chance we can make that happen. If you're at 0 in the last 3 years, that's probably not going to work. But if you're at 3 or 4 in the last 3 years, there's a good chance that we will be able to make that work. Maybe just straight up in our regular program, or maybe we might, limit the LTV 5% or something like that. But we do tend to try and look at things not from just a black and white type of structure, but trying to have a little bit of gray area and flexibility. And just to give you a little bit more detail on the rental loans, in terms of experience is if you own 2 rental properties, we generally will count that as 1 flip. So to give you an example, if you've done no flips in the last few years, but you own 8 rental properties, we would consider 8 rental properties as the equivalent of 4 flips, and we'd be able to do a flip for you. So again, just another kind of example of where there is some flexibility within the guidelines. We're not going to be able to do every loan, and every type of exception, but certainly we're going to work with you as far as that goes. I'm sorry, go ahead.
I was going to ask, are you guys still financing the rehabs for your fix and flip loans, and how is that structured with draws and things like that?
Yeah, so good question. So the typical scenario is you would come to us and put down about 25% on the purchase price, and we would lend 100% of the rehab costs. And then really, nothing's changed with us as far as that goes from what we used to do. And you would just the minimum draw request is $5,000. So once you've completed $5,000 or more worth of work, you would submit a draw request, and we typically will fund that draw within 5 business days. Again, under normal circumstances, as soon as you request a draw, you do that right online with us, and an inspection will get ordered within 24 to 48 hours. So as long as the inspector can get out there quickly, which as of right now with things opening up, we haven't been having many issues with that. And then it is $170 for the draw, just as an FYI. And but yeah, it's a simple process as far as our draws, $5,000 minimum. And if anyone has any additional questions on that, then please ask away, either right now or post meeting, and I'd be happy to answer more specifically. I'll talk a little bit more about fees as well as kind of credit score requirements, etc. We're currently at on our fix and flip and on our long-term rental loans, we are currently requiring a 680 credit score or higher. So that kind of stinks, but because we used to go down to 640 or so. But reality is it's not a huge change. And one thing that's kind of different is we're actually, if you have a partner or a spouse, co-borrower, we're actually going to average the 2 credit scores. So at least we're doing that for the time being. So that's something that's a little different. The fees for bridge loans are tiered based on experience. So if you've done a lot of flips, you're going to be somewhere around 1.75. If you just have a fair amount of experience, you're going to be somewhere between 1.99 and 2.5% origination fee. And we do have a $2,500 minimum origination fee. So in other words, if you have a small project or a small property, there is a $2,500 minimum. And let's see here. Again, that's 2 to 4 units, single families, townhomes, etc. And just to digress for just 1 second, one of the reasons that, and this is just my opinion, but I think one of the reasons that a lot of lenders are, a little bit more conservative or aren't lending altogether is kind of the question of values. Right now, if you got an appraiser to come out to a property, typically appraisers can do a 6-month look back. Well, if you're looking back 6 months, the world was a little different. And so as we're kind of progressing through the pandemic, et cetera, and there's more sales, et cetera, then that's giving all companies a little bit more data on what the values are. And so that's one of the reasons there might be a little bit of restriction is, a lender doesn't necessarily know if you're buying a property for 100,000 if it's worth 80 or 120. So that's just a way to kind of mitigate the risk and still be able to lend, and just kind of do it prudently because just like you in terms of most people involved with Mark and Paul and the group here is in this for the long term, and we are as well. So we're very much interested in kind of partnering with y'all for the long term, and that means doing good loans, both for us and good loans for you. So it's a partnership that I think we've been doing loans for Mark and his group for a long time now, and that's the plan for the future. So in any event, I'm going to go and kind of pivot to the rental loans, unless somebody, Catherine or anybody else, has a question.
I don't see any questions, and you've got all of mine answered right now. So
Good deal. Okay, so rental loans, I'm happy to say we were not doing them about 3 weeks ago, and now we are. And we've also we lowered the rates on rental loans last week by 0.5 point across the board. So I'm very happy to say that. So things are definitely moving in the right direction. The risk of repeating myself, they're not exactly what they were just a couple of months back, but also not that far off. So in terms of leverage, I already kind of said why lenders are a little bit more restrictive. And so it is reflected a little bit here in terms of, what we're allowing. But let's jump in because I'm excited to let you know that all of our loans on the long-term rental are 30-year fixed rate. So it's nice if you're a buy and hold investor, you can lock it in and you can forget about it. And then as time goes by, if rates are lower, you can always refinance. So interest rates start at 6. We actually just added a little thing even this morning. So interest rates are around 6.25 to 7.99, and that's based on LTV and credit score are the two main driving factors in that. Let's see here. If you're doing a purchase, then the max that we will lend is 70%. So you would have to come up with a 30% down payment on a purchase. I hate to tell you that if you don't have the 30%, because if you don't have it, obviously that's hard. We don't allow any type of secondary financing or seller financing. So unfortunately, if you don't have the 30%, we might not be a fit for you right now. However, over the coming weeks and over the coming months, it's going to get better. So kind of that's where things are at in terms of leverage. If you're doing a cash out refi, then our max is 65%. So if you have equity, if you have rental properties, we're happy to cash you out. You have 2 options on the prepayment penalty. It's typical in this space for these investor type loans to have a prepayment penalty. So the standard prepay is a 3-2-1. So it's 3% the first year, 2% the second year, and 1% the third year. And if you are a long-term hold, you can actually choose a 5-year prepay, which would be structured as a 5-4-3-2-1, and that option would give you a quarter less on the interest rate. So you can go online again to get a quote. It works the same as as getting a quote or going online for our fix and flip. And very similarly, once you've done that once and put in your personal information and so forth, that's all you need to do. And then we're just talking about your deals. Leanne has a question. Do you do cash out refi on properties located outside of Florida? Yes, we do. We currently lend in 45 states. So yes, and the states that we don't lend in, we're actually working on getting that up and running. Nevada, Utah, North Dakota, South Dakota, Vermont. So we're pretty much covering the whole country. For some reason, Leanne, that reminded me of a question as well that I wanted to cover is we only lend to LLCs or other type of entities. So keep that in mind. I will clarify that if you currently own a property in your own name, and you're going to do a refi or something like that, you don't have to do anything prior to coming to us. We're going to ask you to close the loan in an LLC, and that can be something that you already have an existing LLC or other entity, or it can be something that newly created one. So because it's a business loan and we're not lending based on your own personal income, that's why we lend to entities, most commonly an LLC. Let's see here. Like I said, interest rates and leverage, as well as fees, are kind of tiered. Actually, in the rental program, they're tiered on credit score. So 680 is the minimum, 740 or higher gets you the best rates, and the points on a rental loan are from 2 to 2.5, actually 1.99 to 2.49, and again has a $2,500 minimum. Our rental loans, like I said, are available for purchase and refi. However, you're probably looking at about 4 weeks turn time on a rental loan. So 7 to 10 days on a flip, 4 weeks roughly on a rental loan. So keep that in mind, especially if it's a purchase or if you're cashing out to buy another property. It's pretty quick. Things have been going smoothly, but we just want to be transparent in terms of turn times. We currently have a minimum loan amount on both of our programs in the $75,000 range. So please keep that in mind. If if you have a property you're looking to purchase and it's $50,000 or something like that, it's not going to be a fit for us, at least not right now. But that will likely change for the better in the near future as well. Let's see here. What else do we want to talk about? Rental loans, entities. We are, for the most part, we are looking for rental properties to be leased. I want to make sure that I emphasize, if there's any questions at all, reach out to me. I'm talking a little fast, and so A, you might not catch some of the things I'm saying, and B, maybe there's an exception or something that we can do to make that fit any situation that you might have. What I'm getting at is we're currently requiring all rental loans to be leased. However, if you're doing a purchase and it's not leased, then we're going to ask for the lease within 60 days of closing. So there's some little caveats and so forth. But yeah, we definitely want to make sure the property is either leased or going to be leased. If it's a refi, it 100% right now at the moment needs to be leased. If it's a purchase, then you're going to have 60 days to do that. Another thing that I'll add in regards to rental loans, and there's a little subtlety here, but you can purchase a rental property and let's say it just needs paint and carpet. So it needs a little bit of rehab. You're going to have a renter in there. It doesn't need a lot of rehab, but maybe you're putting in 3, 4, 5,000. You can go right to our rental program with that loan. You don't have to rehab it first. You don't have to borrow the money for the rehab. You can go and right into our rental loan. Just be sure that there can't be any safety issues. It has to be rent ready. I guess that's really the key. So there needs to be electricity and utilities, and there can't be any, mold or, things that raise a red flag or just need major repairs. But that's good for people to know that a lot of times people think they have to complete the rehab prior to. And so as long as it's just, more on the cosmetic side, not a problem at all. Oh, did I mention the rates? I think I did, right?
I did, but it wouldn't hurt to go over them again.
Okay, so interest rates on the rental program, again, credit score and leverage are the two driving factors. But you're at 6.25 to 7.99. I wish I could tell you interest rates were in the 5s, but they're not. But the reality is, months ago, our average rate was in the 6s, on an average loan. So things haven't really changed that much. If you're out there saying, well, I can go get a conventional financing in the 4s right now, then by all means, if you qualify, go get that conventional financing, and we're here for you when that runs out. So if you can go buy 1, 2, 3, 4 properties in the conventional route and qualify, that is probably a better route for you to go anyway. But the main thing that I want to communicate with you is we're here for the long term. So if we can't do a loan for you now, please don't be discouraged. 6 months from now, 3 months from now, a year from now, we're going to be here for you. And, down the road, you'll have different needs and wants anyway, and we'll be here for you. So one of the last things I'll mention is some of our other products, which are not currently available, but for those people that are new to LendingOne or new to REI, previous to the pandemic, we were doing new construction, portfolio rentals, and multifamily bridge. We see those coming back down the road, and so please don't be discouraged. I'm sure Mark and Paul, in one way, shape, or form, has communicated that the bigger the challenge that you have, the bigger the opportunity that we all have. So even though things there's no lenders out there and this is going on and I can't get can't get a contractor or something done, I'm sure that you all know that there's a ton of opportunity out there, and there's going to be a lot of opportunity with unfortunately, with all the bad things that are coming with unemployment and so forth. That's going to create the need for people to sell houses, and it's going to create a lot of opportunities for investors like yourselves to, and so the ones that are prepared and are strategic and are following, sound advice are going to reap the rewards. So I encourage you all to, stay close to REI, reach out to myself, like I said, phone, email, text, and I will be give you good service, give you accurate information, and be transparent with you in terms of what we can do and can't do. And I think we all see the future as pretty bright, as we all get through this.
Yeah, so I am going to post your email address in the group chat for anybody who has questions. And I also am reposting the link that will actually take you straight to the LendingOne website. It is specific for Paul. So once you submit your application on that website, it'll notify him like he talked about instead of just Googling LendingOne and then having to go through all of the different channels. If anybody has any questions, you guys will also refinance. Say somebody buys a moderate, because you're not doing large rehabs right now, a moderate rehab that does need the 7-day close and things like that. You guys will refinance back out those properties on things that you've already lended on, rehabs that you've already lended on for a rental portfolio, correct?
Correct. And it sounds like you're referring to like the Burr method.
Yeah, what everybody's so hot about right now.
Yeah, exactly. So yes, I'm glad you brought that up because we do allow that. So you can turn a flip into a long-term rental loan with us. And so we've done a lot of that historically. One of the nice things about that program is we typically only need like a lease and an appraisal in order to take your flip loan into a long-term rental, and not only that, we'll comp you for the appraisal on the rental loan back at closing. So it's a very, very streamlined process, and it's great for people that are buy and hold investors. I'm a huge fan of buy and hold. I've been doing loans for real estate investors for many years now. And, in terms of creating wealth, I probably don't need to tell anyone on this call, but in terms of generating wealth, it's a great way to do it. And our program's pretty successful in helping people do that. One last thing I'll mention. Yeah, make sure in terms of if you're going to LendingOne to get a quote or reaching out to me, do yourself a favor and use that link, or reach out to me directly and just say, hey, Catherine or Paul or Mark sent me to you. It's not a big thing, but any loan that you do with us and you come through as a referral, we reduce the fees by $150 for members of the REI group and so forth. So that's why you want to use the link versus just going to LendingOne.com. We don't care, but we want to make sure if you use the link, it also goes to me so that I make sure you're getting good service, and then B, we give you a little bit of a discount on the fees as well. I will also throw my phone number in the link here, and then feel free to call me as well, and email, etc.
Because that just came to me. There everybody goes.
Oh, I didn't.
No, you're good. Are there any other questions? Does anybody have anything going on specifically? Can you describe the documentation required for your rental loans?
Yeah, good question. Let me pull it up to see if I have it right here handy. So the nice thing with us is, because this isn't conventional financing, there's not nearly the amount of paperwork involved. So it's typically just a handful of things. We're going to ask for a sales contract if it's a purchase, entity documentation, if you're closing in an LLC or other entity. We're going to ask for a driver's license. We're going to ask for a lease if it's rented. And we're going to ask for a bank statement for the proof of down payment. So very, very simple. Again, bank statement, lease, sales contract, entity documentation, driver's license. We'll probably also ask for an REO schedule, just to verify your experience. And I'm actually glad that question was brought up, because that reminded me, In terms of experience for rental loans to qualify, it's different than flips. We just need to make sure that you own one rental property. So that's the only requirement. Typically, you have to also own your own home, but there might be some flexibility in there as well. Like if you happen to be a renter and you own a couple other rentals, then you're fine. But typically, you just need to own one rental property in order to qualify for the rental loan.
Perfect. Awesome question, Leanne. Are there any other questions that we can get answered for you? I always feel like the Jeopardy music needs to play after I say that.
Yeah, you got to get that queued up.
Yeah. Mark, is there anything that you want to add? I saw you jump on here.
He's probably talking into the mute right now.
I think I just unmuted him. He should be able to control it on himself. Mark, is there anything that you wanted to add? Once again, cue the Jeopardy music. Do you offer any 100% LTV loan flip loans?
100% LTV? No, it's the max is 80% currently.
And one thing I want to emphasize, and please correct me if I'm wrong, these are changing quite frequently. So this is as of 5/27/2020, could be totally different tomorrow or the next day.
Correct. So that's 100% correct, Catherine. I'm glad you kind of brought that up again, because we've had guideline changes almost every week, and that will probably continue. So, on our rental loans, for instance, the max we were at a week ago was 65%, and then we went to 70, and then we lowered the rates by half a point. And it's been fairly similar with the fix and flip loans. We started off at lower leverage, and we've been kind of steadily increasing. So please, if we're not a fit right today, keep us in your back pocket, whether it's going online, filling out an app, contacting me directly, however, because I can almost guarantee you that a month from now, the programs will not look like they do today. And that's just with all the change going on. So, if you're someone that can embrace change, which I'm a huge fan of, that will put you in a better place, because if we're not a fit for you today, there's a good chance we'll be a fit for you down the road.
Absolutely. And it's always a great resource to have. It takes a little bit of your time to go through the application process on the website through the links that we provided. And then you've got that in your back pocket if there is a situation or scenario that you could be a resource on. So. Yeah.
And I'll just add that, along the same lines is, feel free to reach out to me by phone or email or however, and say, oh, here's my scenario. Hey, I'm looking at purchasing a house for $90,000. I want to put $50,000 into it. Here's the address. Can I do X, Y, and Z, or what would I qualify for? Happy to give you answers, to those type of questions all day long, and see if we can make something work for you.
Perfect. Okay. Here we go. Does it make sense to fill out an application in advance and have it on file?
That's a good question, and I actually get that a fair amount. You can do it either way. It's not a bad idea to do it, because if you're, let's say, shopping and you're looking for a property, and once you find that property you want to move, then I would suggest knock that out. It should not take you more than 5 to 10 minutes to fill out the application. And as I mentioned earlier, you only have to do that once with your personal information, experience, etc. Once you've done that once, and on the next properties after that, you're just entering the property specific information. So it's not a bad idea to go out and fill out the app ahead of time, especially if you see yourself being active soon. On the other hand, if you say, hey, I'm going to hold off, there's no problem with that either. So either way is totally fine. But if you want to, if you're looking to be organized and get your ducks in a row, it's probably a good idea.
Perfect. Are there any other questions?
And I guess one last thing I'll mention is, generally speaking, if you're not experienced and you can partner with somebody that is experienced, then that might be a way for you to qualify. So just want to throw that out there. Let's say you have zero experience or you've done one flip, but you're looking at partnering with somebody. We're going to basically count the total, the total number between, two parties if they're partnering together. In that type of example.
Okay, perfect. Well, thank you so much for checking in with us, Paul, and sharing everything that's happening in the crazy world of LendingOne. We really appreciate your time and knowledge and sharing it with us. Really quick, I wanted to let everybody know tomorrow night, which is Thursday, I can't believe that it's already Wednesday this week, we have REI Live Sarasota at 6:30. It's still going to be virtually right now. It is Dan Zidzovsky. I have a really hard time with that name. I do apologize. He'll be speaking about money and raising assets and growing wealth. So that is something that you guys don't want to miss. If you guys would like to grab tickets, you can do so from our website, which is www.reilivesrq.com, or you can find it on our Facebook pages as well. And you guys have Paul's contact information if you do have any questions. You also have the link, that as well as on our website if you guys do need to find that later. I hope that you guys have a wonderful rest of your day, and thank you so much, Paul.